Hello and welcome to this episode of Focus On with me, Zanele Morrison. According to the Financial Services Conduct Authority, for people to be effectively included in the financial sector, focus is needed not only on access to bank accounts, but also access and the sustainable use of a diverse range of financial products and services that are appropriate to customer needs and economic circumstances. In this episode, we delve deeper into driving financial inclusion in Africa, and joining me for this critical topic is Lee Naik, CEO of TransUnion Africa. Lee, thank you so much for joining me. I think for me, for the whole cause or purpose of TransUnion to exist, for that to be around financial inclusion, I find quite interesting, because the work that you do is to look at financial data and to qualify clients and to place them in the spectrum. But you're actually fighting for financial inclusion. How do you match the two?
So it's quite interesting. Many people think of TransUnion just as a credit bureau. I joined the company some 8 years ago. One of the big reasons was why join a credit bureau. It's been around since 1901, so some 124 years. When you think of inclusion, you think of the African continent, a continent of 54 countries. And one of the challenges about Africa is that 53 of our countries were colonized. And when I think about the lost opportunity, the question is, what's holding us back? In fact, if you look at the global perspective on the Sustainable Development Goals, of the 17 SDGs, 7 of them are enabled by financial inclusion. So when I joined the company back in 2017, the first thing that drove me to the business was the ability to solve a meaningful problem like financial inclusion. So yes, it's all about financial data. What inclusion talks about is taking the data and seeing not just data as numbers, but as seeing data being potential for people and for businesses. We all want to see hope. And how do you take the numbers from more than just being Excel and stats to helping us think about the potential in people that want a chance?
So you had and I think again, there are a lot of options to change the continent and the platform of the continent. And we talk about financial inclusion a lot. And I think rarely have I taken the time to ask, what does it mean? What does it look like when in action?
Absolutely. So it's an interesting question. When you think about financial inclusion, it's about taking every citizen and giving them access to a financial product or a financial service. Now, it's more interesting than that. Just giving you a place to store your money is not useful. For us to actually enable people to have a better quality of life, we need to move them across the financial continuum. So move them from just having a store of money in a bank account or in a mobile wallet, which is now more popular with the infrastructure of telcos in the continent. How do you move them from having a store of money to getting microloans, to having access to a form of credit, to allow them to have leverage, to buy food for their corner store, to buy fabric, to open up a store, to sell to your community? Financial inclusion is about starting the journey of giving people access to finance and then responsibly moving them across the continuum where they can have leverage to create personal wealth and value for their family and communities.
Now, when you are trying to do that, the biggest challenge, or perhaps the biggest partner you have, is regulation. And South Africa is highly regulated, especially for the financial services sector. How is that landscape changing to allow for financial inclusion? Because I do not come from the background where when I started and I finished university, I had any assets whatsoever, right? So I had nothing to ever show the bank until I created something out of nothingness. And that's already a delay, because the bank is looking for certain markers that only fit certain members of society. How else is the industry needing to think to enable financial inclusion?
It's really interesting in that financial inclusion isn't a new concept. It isn't an African concept. We do talk about 500 million people in the continent being excluded, but it isn't novel to South Africa. And in fact, the South African Reserve Bank, the FSCA, many private sector companies all realize that if we get financial inclusion right, we can grow society and the economy. So I'd like to believe that both government sector and the private sector want to solve the problem. If you think of our low GDP growth as South Africa compared to higher GDP in other markets, how do we solve that in a highly indebted market? Well, the answer lies in inclusion. There may be people within the community that want to participate, but to your earlier point, using traditional ways of deciding, it's not possible. So we start to talk about a concept called alternative data. And what this means is, are there other sources of data about how people live? It could be how they use their cell phones, how they pay their bills, the areas they live in, the jobs they have. Could we infer the potential in people by looking at other sources of data? Here's what's quite interesting. Our own national credit regulator, together with the World Bank and other government bodies, are looking to see whether this is possible. So the good news is that for the last few years, that the National Credit Regulator, in partnership with partners like IFC and the World Bank, have been trialing this concept out. In fact, across the world, this concept is seen as that problem worth solving. I was recently in Brazil to present at a World Bank event on the initial successes we're having in South Africa. And the good news is that if we think differently, and if we find partners in the private sector and the public sector to embrace these new ways of thinking, then it is possible. It is possible to see beyond the current indebtedness, to find those cohorts of youngsters and disenfranchised people that want a second chance and deserve a second chance.
And that's an interesting one, because I really want to move to young people, right? We have a huge population of young people coming out. They're earning far less, and their money is able to afford far less. So there's really a dissonance between them getting the degree, getting the job, looking at the money and realizing how little they can do with it. And yet at the same time, huge upswing in consumerism with all the platforms that they have to choose from. What's your view on young people and how they're shaping up as the future generation?
Well, it's a really loaded question, but what's true is that the African population is quite young. Across the continent, the average age is 18.8 years. So it's a young population. In fact, our population grows by 2 billion across the next 80 years. So with that in mind, we're starting to see the influence of the youth. In fact, when looking back at some of the data that we look at TransUnion, in Q4 last year, the highest growth of credit came from the youth. Now, what's interesting about the youth, specifically before the elections and now we post-election, is that they were the most optimistic about their futures. They believe that they need to get mobile, out of their homes to find these jobs. So the system is starting to see the power in the youth, given our young population. And what's interesting is, if we understand these personas, not just as dads and mums, but as businesses and as lenders, we can start to get to them in a way that makes sense. These youngsters have strong points of view. We got to seek to understand them. And that's a lot of the work that we're doing as TransUnion and this broader industry, because the same youth are our future leaders. We got to see their potential today and get to them when they need us most.
And I think your job, whilst it's on the surface, it's, as we have in the conversation now, sounds really interesting, but you deal with a lot of data, right? And data mining is probably key to what it is that you do. How do you see data playing a value to your customers, to your to your partners? You've talked a little bit about it, but I'd love you to expand and say, where's the power in all this data?
So data is all around us, whether it's your patterns on your phone, it's how you drive to work. And you realize that the more you experience life, the more life is gamified. There's incentives for driving well from your insurer. There's benefits of going to the gym if you're healthier. So as you think of the world around us, there are data sets that are available to help us understand you better. And if you understand how to understand people and businesses better, and in a construct or a framework of data privacy and being aware of the regulation, you can actually start to understand them. Now, what's interesting about businesses, both corporate and smaller businesses, which are really interesting, mind you, is that they want to do better businesses. So what then happens is we are able to leverage our data science capabilities and globally built IP. Some of the IP we brought to South Africa way back in 2018 is data that's been built and proven in other markets like Colombia and Brazil and India. One of the things about opening up for global collaboration is you're able to reuse and kind of skip those hard lessons. It's possible to make an impact if we learn. What's interesting about our customers, the big banks, lenders, insurers, is that they realize that they've got to change how they show up in the market. As opposed to having big physical buildings, we need to go digital. The future of our population is connected to the phones that they have in front of them. So for us as big businesses, how do we start to understand the behavior? Because you aren't physically going into stores necessarily. You aren't having the same behavior as your parents did. So the data exists. I think the challenge is, how do we challenge the orthodoxies of how we work as businesses to go back and say, is it possible? Then to allow the really smart data scientists in the business to prove out these use cases. And what I can tell you over the last few years with the clients we work in across all sectors, innovation is rife right now. Everybody's looking to find new ways to drive the economy. It's not just structural elements like electricity. Now that we're starting to become more organized at a structural level, the question is, how do you see the potential in people? And the truth is, in a high unemployment environment, there's a lot to be done. There are millions of people that live in extreme poverty in South Africa. If you can start to give them a second chance by looking at them differently, then it's not just about job and employment. Actually, what's interesting as a really useful stat, across the African continent, people always think of large corporations creating employment. It's these small SMEs in the township economy that create these jobs. In our own analysis, typically between 1 to 5 jobs get created for every successful SME. So the focus now is not just on large businesses. Almost all the work I do personally is on how we create SMEs and make them show up in a way that banks and lenders and funding and venture capitalists want to work with them. If we can get them to survive, they will create the much needed employment that South Africa and Africa needs.
Lee, thank you so much. I think that's really food for thought for our audience. Thank you for taking the time. It's a changing world and we are here for it. So thank you.
It's a pleasure. Thank you so much.
And that's where we have to leave this conversation with my guest, Lee Naik, CEO of TransUnion Africa. From me, Zanele Morrison, it's goodbye for now. Till next time.